Afternoon on the marketplace, the Securities and Exchange Commission is warning the general public to beware of Chinese electronic commerce company Shimall. Also, Ghana set for the first sub-Saharan African LNG to power project, which will switch from dirtier fossil fuels to keep the lights on at a very much cheaper cost. We shall be having a discussion on this one. Plus, the National Insurance Commission extends the deadline for the recapitalization of insurance companies from June 2021 to January 2022. We'll hear from the industry players on this developing story. And later in the bulletin, we explore major economic challenges that lie ahead for the president's second term in office. Hello once again, I'm Charles Aite. We have all the stories coming up shortly after this break. Hello and welcome to the program. Now, the Securities and Exchange Commission is warning the general public and investing public to beware of Chinese firm Shai Century Hengye Group Limited, which has been undertaking electronic investment transactions. According to the capital market regulator, it has not licensed the firm to carry out any capital market activity, including investing or trading for returns as mandated by Section 3 of the Securities Industry Act. As such, Shai Century Hengye Group Limited cannot operate as an investment firm. It is therefore advising investors to consult the SEC through its toll-free line or main telephone number to confirm the licensing status of any firm offering products or services relating to investment in the capital market. The SEC reassured all market operators, investors, and the general public that it is dedicated to ensuring rigorous implementation of all the rules or operators in the capital market in order to promote the orderly growth and development of an efficient, fair, and transparent securities market. Well, this is the story. This is the public notice we're getting from the Securities and Exchange Commission. In another way, the company in question has also responded to this public notice. It says that it is not an investment company and never an investment company. Neither does it engage in any securities activity, hence the need to obtain and have the Securities and Exchange Commission license. The Shai Century Hengye Group Limited also considers these publications from SEC as timely and necessary as it seeks to educate and further distinguish the Shimall business separate from businesses under the mandate of the Securities and Exchange Commission. You can see their response there on the screen. It also goes on to say that management by this publication expects its service centers and leaders, especially within Ghana, to embark on proper and rigorous sensitization and public education. This, when done properly, will create the needed awareness of the Shai Century Hengye Group Limited business model and nature. This is a developing story getting from SEC, and the response, as you could see on your screens, from the company in question. It begs the question, what happens if you have your funds locked up there? What happens if you transact in business? Well, let's bring in the Executive Director and Financial Literacy Africa, Dr. Richmond Kwame Frimpong, who objects to the public notice by the Securities and Exchange Commission. He joins us via Zoom. Mr. Frimpong, we're so grateful that you joined us. Why this objection when especially SEC has, established its position based on specific sections of the Securities and Exchange Act?
Right. Good afternoon to our viewers, and thank you for having me. Not necessarily an objection, but some commentary on this position that is playing out.
Okay.
Remember, this is not the first time we are having to have a banter between an institution that says it's not under SEC and SEC also going out to the market to issue to the investing public of just being cautious. Now, when we say securities are simply what we call fungible and tradable financial instruments that are used to raise capital either in the public or the private markets. Now, there are basically three types of securities we have. There is a debt, there is a equity, and there is a hybrid. But whatever it is, whenever there is an exchange and when there is trading and when there is a raising of funds, then SEC in that space is responsible for supervising that exercise as a regulatory body. Now, with hindsight from what happened with Men's Gold, my expectation is that even before this release, SEC by this time should be having a conversation and an engagement with anybody that even registers this organization in question, and possibly even go underground and even become potential clients of this kind of organization and verify for themselves if indeed the transaction that is going on falls under the Securities and Exchange Commission, rather than to just issue a circular and say that customers should just be aware. Remember, when all is said and done and customers do not even heed and challenges happen to this kind of business, ultimately it is the government that will take responsibility, and SEC may be found wanting to probably take a second look at their position. So my expectation was that it was not just going to be just a circular released, but it was going to be something more than just issuing a circular.
But don't you feel that there have been some background checks, there's been some engagement between both parties, especially when SEC is much more insistent on the fact that they wouldn't want a replay of Men's Gold?
Right. So if SEC has done that work and anticipates that the organization is flouting the regulatory jurisdictions, then why is it just issuing a statement to its potential customers? Why is SEC not taking action if indeed the organization is flouting the regulations that SEC supervises?
So your argument is that there should be some closure of the premises?
Even if there's no closure, I'm saying SEC should do more than issuing just a circular. If SEC believes that indeed the organization is trespassing with any kind of securities trading regulation, it should do more with other parties. The organization is registered, I believe, and it is registered probably with the Registrar General. SEC should be able to engage with them. The organization, if SEC has verified that they are taking deposits or they are taking funds or they are raising capital, then there is more to just saying we are not under SEC. And if SEC just sits and issues a circular, and the organization come to just issue a banter to the circular, then we are going back to the same game we had with Men's Gold. But I'm saying ultimately, it will come to bite the government, and SEC should do more than just issuing a circular.
You know, Richmond, we're having this discussion on the back of, some sort of criticism on the part of SEC, because this isn't the first time we're seeing this situation, rightly stated, the banter with Men's Gold for a while. What do you think is the lacuna in this whole, securities industry, especially when the world is evolving? Modes of transactions, financial transactions are mostly evolving. We recently had this discussion on Bitcoin. What do you think is the lacuna when it comes to regulations within these electronic specters of transactional, activity?
I think the biggest lacuna we are anticipating in terms of regulation is our inability to build a financial services regulatory body, so that we don't have jurisdictions where banking, pensions, insurance, investment all have different regulators. And there is no center in terms of regulation that is able to hold any party that comes within that circle. Now, even with fintechs coming on board, you notice that now fintechs have some regulation from the central bank. And there's going to be a time where digital sales and digital trading like this would have to come somewhere under the financial services platform. Unfortunately, we don't have that now. And almost every one of these regulators is independently doing their thing somewhat.
Right.
Until we rise and consolidate financial services regulation, it will be difficult to have these authorities talk among themselves, share data, share ideas, and be able to nip organizations that try to play with regulation in this space in the bud.
Dr. Richmond Frimpong, we're so grateful that he joined us. He's the Executive Director for the Financial Literacy Africa on that developing story there from the Securities and Exchange Commission. You're still watching The Marketplace here with me, Charles Aite. Ghana is set to open Sub-Saharan Africa's first liquefied natural gas to power project as it moves to position itself as a hub for the cleaner and cheaper fuel in the region. Now, this model has been booming from Asian to Latin American in recent years as they allow nations to switch from dirtier fossil fuels to keep the lights on. And for the sellers, integrated LNG to power provides a guaranteed outlet for the fuel. Well, here's what we know at Joy Business. First, that the Tema LNG Terminal Corporation received the floating regasification unit from the Xiangan, China on Wednesday. This is what we know. Also, we're picking that this paves way for the supply of about 1.7 million tons of natural gas per year for power generation sometime this quarter. Also, we're picking that the $350 million project has been under construction for about 2 years now, backed by Helios Investment Partners and Africa Infrastructure Investment Managers. Also, the fourth tip we're picking is that state-owned Ghana National Petroleum Corporation is currently the mandatory off-taker who received regasified LNG to 4 plants in the Tema Palm and Industrial Enclave. This is big. This means so much for Ghana's energy industry. And to answer the question of what exactly this holds for the sector, we are joined via Zoom by Dr. Yusuf Sulemana. He is an energy strategist and an expert in global energy geopolitics. He's also the lead technical consultant for COPEC GH. We're so grateful, Doc, that you joined us. Happy New Year to you. First of all, for a country with 30 million people, you know, Ghana's electricity consumption has grown alongside its economy, but, you know, it remains lower than the average per capita consumption of sub-Saharan Africa. Why this project then, some may ask, when indeed we are doing it all good in the electricity sector?
Yeah, thank you very much, and thank you for having me. Good afternoon to your cherished viewers around the globe and your cherished listeners as well. Yeah, so that's a very good question that you've asked. The question is, why this kind of project? Now, I'll just try to explain to you in principle what this kind of project means and its impact to, you know, Ghana power supply. Regasification unit is simply just gasifying LPG or natural gas. That's what we normally call the LNG. Okay. You know, to make it at the state that can power plants readily. Now, over the years, where are we coming from? Over the years, Ghana has always been dependent on heavy fuel sources, you know, to generate power. Largely, a component of it is crude oil and RFO, that is residual fluid oil. Now, these sources, unfortunately, are imported into the country. It creates a lot of burden on the economy. It creates a lot of, you know, pressure on the city. Now, to the extent that we're going to have a structure that will be within our shores, that to be able to provide this quantum of gas, LNG, which is largely methane, let's say 90% methane, okay, you know, which is cleaner, fresher, and more purer at competitive rates, you know, to power our power industries. That would be great.
Interesting.
Now, you remember the history about IPP. Why the IPP came to light? IPP came because industries were ready for power, but there was virtually no supply of power. In fact, domestic consumption for power was not even available, and that's how come we had to do so. Now, 3 things accounted for this. We need power availability, we need power affordability, and we need power dependability. If these 3 things are not met, we are not going to have sufficient supply of power that will be inured to the benefit of the end user.
Well,
now, why we didn't have
sorry to cut you there, but you know, I just want to also chip in this whole point and even pose the question: to what percentage will the LNG to power project wean Ghana from its dependency from the West Africa gas pipeline, and even that of, you know, independent power producers? You rightly stated, you know, the causatives to doom so. Where do we see ourselves weaning off from these, you know, power producers in the future?
Yeah, the great thing is, I think the nation is already gravitating, you know, at a very good rate, if I may put it that way.
All right.
I mean, gravitating from a heavy fuel sources of generating power to liquid sources. Now, one of the contributors is WAPCO, that is West African Gas Pipeline. Ghana is able to get gas from West African Gas Pipeline. Now, the coming in of this project is not going to be a one go. It's going to be a transition. We're going to gradually transition. Ghana is going to gradually transition from dependent on this, you know, infrastructure, credible infrastructure that we are told, you know, to dependent on West African gas pipeline. Remember, West African gas pipeline, the supply has been erratic. You know, what percentage Ghana is going to win off, we cannot tell at the moment. Everything will depend on the dependability, ready availability, and affordability of whatever is coming from, you know, the project that we're getting. But the assumption is that the proximity of this project to Tema Enclaves, which is housing the industrial hub, the power generation points of, of Ghana, we believe that the proximity will will ensure that power supply to those units will be at competitive rates.
Great.
So well, by way and large, I think we expect that, you know, we should gradually win ourselves off from WAPCO.
Great.
But it's going to be gradual, yeah.
Great. Well, the project, we understand, is being financed with a combination of equity and debt from the consortium of international banks. How can government partake of the financial instrument moving forward?
Yeah, the good thing is, I think it's already indicated that our national oil company, that is GNPC, will be the off-taker. Now, GNPC being the off-taker means that we already have, to some extent, some participation as possible. Right. But what I like about the project is the fact that, a private sector-led project will always be efficient. It is not a government champion project, if I may put it that way, not directly. You know, Shell is behind that as a supplier. I know companies that understand business profitability, vis-a-vis what it tends to make profit when you are running business, they are bound to be efficient. So to the extent that, GNPC being the off-taker, Ghana still have some interest, however little it's going to be. But a hybrid model, that is equity and, debt, is known to be one of the competitive models. So again, I'm very convinced that with hybrid model, I believe with several players coming to play, others through equity and debt, I think such a model is credible. I believe it's a credible model that will inure to the benefit of the nation.
Great. Let's end on this. When all is said and done, the processed LNG is expected to be 30%, 35% cheaper than heavy fuel. Explain how it will impact fuel prices in the country moving forward.
Yeah, that's correct. Generally, LNG, gas-fired, power plants are generally cheaper, cleaner, purer, and competitive price-wise to heavy fuel-fired. Now, if you supply a gas of like $8 per million BTU, that is British thermal unit, it is competitive to oil at $50 per barrel.
All right.
Just imagine 8 against 50. That is so good. And in fact, we can do even as low as, let's say, around $6 million, $6 per British thermal unit, if we are competitive. And so that makes it, at the end of the day, it will reduce, the power the end user pays, per kilowatt power the end user pays, to about 30%. It will translate to about 30% reduction. But again, that will be at competitive rates. Ghana is not going to get it, of course, on a silver platter, let me put it that way. It's going to come in competitive rate. But the good thing is, the market is ready to receive that. And that's the beautiful about the beauty of the whole thing. Once the market is ready to receive that, it means that there is ready supply. So yes, there will be reduction because gaseous fired power plants are always competitive price-wise as compared to liquid-fired power plants.
We're so grateful that you joined us, Dr. Sulemana there. He's an energy strategist helping us break down Ghana's 350 million LNG to power project. You're still watching The Marketplace with me, Charles Aitip. President Akufo-Addo now has the constitutional and legal mandate to govern the country for the next 4 years after being sworn into office by the Chief Justice last week. But what are some of the major economic challenges that lie ahead for the president in the next 4 years? George Raffi has more.
Some of the main challenges that lies ahead for President Akufo-Addo will be what kind of policies he should quickly implement to help stimulate economic growth. That follows projections that Ghana may record one of the lowest economic growth in many years when the data for the end of 2020 is put out. But according to President Akufo-Addo, he already has plans in place to deal with this challenge by pressing hard to industrialize the economy.
We defined last year as the year of roads. This year will be the second year of roads as we continue with our focus on dealing with the deficit in our road infrastructure. The development of our rail sector, on which considerable resources and energies are being devoted will open up the country and lead to the creation of a more connected society, and will also help realize the goal of regional and continental integration.
But others are worried about how the president intends to finance this proposed aggressive industrialization when the country's debt stock is rising so high, and the fears that COVID-19 might also make it difficult to raise the required funds from the international market. Another area that might be of concern to a lot of people is job creation and reducing the cost of living. Despite claims by government of doing enough to help stabilize the economy, there are some who are questioning this claim because they are still yet to feel the impact in their pockets. But again, in all, how does he make sure that the public purse is managed prudently? This is because of the associated impact of this on the Ghana city's stability and the cost of living in the country. Again, with the perceived hung parliament, looking at how the election of the speaker went, but there are some who are worried that President Akufo-Addo may struggle to pull through some ambitious programs in relation to revenue mobilization and even securing approvals from parliament when it comes to granting incentives to foreign investors. Again, in the area of revenue mobilization and looking at how COVID-19 has impacted badly on the operations of businesses, some are also worried that government may struggle to raise the required revenue to finance its rising expenditure.
Well, the National Insurance Commission has extended the deadline for the recapitalization of insurance companies from June 2021 to January 2022. The extension of the deadline is as a result of the economic impact of COVID-19, which has affected all businesses around the world and in Ghana. The NIC in June 2019 announced a new minimum capital requirement for insurance companies operating in the country. All the companies were expected to present their recapitalization plans by December 2020 and were to meet the new requirement by June 2021. However, with 6 months to the deadline, the NIC has come out to give the companies a further 6 months to adequately prepare to meet the new minimum requirement. As you could see on your screen to this effect, the fact that the NIC has really, given much more time for the players in the insurance industry to meet the deadline. Thankfully, we're joined by the CEO of an insurance firm. Of course, he joins us currently to help us understand the impact this could have and, of course, how best they are figuring things out. So we're joined currently by Chief Operations Officer of Serene Insurance, Maxwell Marfo. We're so grateful that you joined us, Maxwell. Yeah. Happy New Year to you. So, first of all, how do you receive this new directive from the Insurance Commission that you could now extend?
Okay, we as a company, when we heard about it, we were so excited. Even though we knew we had already met it.
Sure.
But at least it gives other companies a breather for them to organize themselves to raise up this minimum capital. But we were okay with it because we were already there. But we were also thinking about others, So I think it's a good breather for other companies to put themselves together to raise this minimum capital.
But the NIC is, giving out this particular extension in the wake of COVID-19. It's really had a toll on your industry. Help us understand, share to us your COVID-19 story within your spectrum as CEO for this insurance firm.
But truth be told, in the midst of this COVID, we were rather making it big.
Okay.
We were rather making it big.
Okay.
In fact, in the midst of that, we met our target somewhere in June.
Interesting.
Somewhere in June, we had already met our target. So COVID, yes, I would say it affected other companies, but we as a company, I would say no, because even in the midst of that, we were other employing, whilst others were showing their staff the exit and all that, but we were rather employing. So I say in the midst of this COVID, we have done so much, and we are so grateful to God.
Now there is an extension. The minimum capital has been raised. Are we going to be seeing a shift in the product lines of insurance companies moving forward?
Yeah, what I would say is that most companies wouldn't do much, but what we want to leverage on as a company is that, I don't know whether you heard it, that NIC is going to enforce the marine cargo policies, making sure that all imports that come into the country definitely would have to have marine cargo insurance policy. So before the end of third quarter, we'll tailor a policy, a marine cargo policy for our insuring public. So in the midst of that, what we are doing is that we are coming out with a policy to sell to this our marine clients, or clients that are into importation. So we are going to tailor a policy for them in the midst of this COVID-19 thing. But when we're talking about a new policy, I don't think there is any company who would want to come out with a new policy, but rather leveraging on this opportunity that the NIC is trying to create for the industry.
We're so grateful that you joined us. Many thanks for that particular interaction with us. And of course, we shall be having this interaction in subsequent bulletins. Many thanks. But that's how we end this edition of The Marketplace. My name is Charles Aitib. Enjoy the rest of our programs.